Good morning. It's Wednesday, April 16th. Thanks for joining me. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So we got an exciting overnight trading session, and it was one of those sessions where I woke up at 3 in the morning, made the mistake of looking at my phone, scanned Twitter real quick, saw some of the headlines, some of the fireworks taking place. I knew that gold was taking off on the upside before going to bed, but really it was the acceleration higher with a lot of the dialogue coming out, and I think that that's why I suggest really having that futures trading account in addition to your wealth management, in addition to your physical holdings, to try and capitalize on the types of movement that we're seeing in these markets here. Because you look at gold up $80 an ounce right now, up 2.5%. When you get to these higher levels too, and you get higher volatility, that's where those position sizing really takes place here. And that's why they've got the 1 ounce, the 10 ounce, the 50 ounce, the 100 ounce contracts here. So you get the positioning right, kind of stick your toe in the water with a few different things here. So really everything started yesterday. So we got to take a quick look and a quick recap from yesterday's trading session, because it was a quiet trading session on Tuesday. There was a risk on vibe in the US equity markets, kind of fueled by upbeat earnings, found the news that you have additional Chinese tariffs on Boeing. So that was the sell-off early in the session. Then what happens, we have some earnings come out, markets start to lift back up. We see volume really die down in the gold and the silver market. They kind of consolidated here. And then towards the middle of the session here, we had some break-in news headlines that appeared to shake the markets a bit. And to quote it, it was the European Union expects U.S. tariffs to remain in place as talks make little progress. So that really rattled the equity markets. That's when we started to dive back down. That's when gold got a bid again here, and silver lifted up just a touch here on those particular markets. So the markets from that headline remained quite uneasy, and the real fireworks began. It was after the closing bell. So you saw Nvidia, they faced new U.S. restrictions on exporting its H2O chip to China, costing the company billions of dollars. So it's the H20 chip. Due to the new rules, the company will report about $5.5 billion in write-downs during the fiscal first quarter. So the new restrictions will likely impact Nvidia's revenue, with analysts estimating a potential loss of $14 to $18 billion this year. So you look at this chart here on Nvidia, and it basically came in right around that 112 to 113 area into this news announcements, and then it just fell like a stone, got down to about the 105 handle, and then since then it's kind of been back and forth, and it's been playing off of some of the discussions with China and things like that. And the market, frankly, bit of a risk-off mood here in a die-down in sentiment. So Nvidia shares here are tumbling into this early morning. So let's take a look at the US equities, the dollar, gold, and interest rates, because those are all the main drivers around this US-China trade talks here. So the S&P 500, I gave you the key level of resistance about the 5,500 to 5,564 level. That was the April 3rd collapse. That was the return to the scene of the crime, as they like to put it, where we come back up to those levels. So now you can revise down those resistance points as equities are making lower highs. And I'll add the S&P 500 to the chart back and outline a couple areas of resistance and resistance zones in those markets. Now looking at the US dollar down about 0.5%. All the foreign currencies against the dollar are beginning to rise again. We're seeing big inflows into the euro currency, and then also the Swiss franc getting a bit of safe haven demand, as well as the Japanese yen. So the dollar index down 4 out of the last 5 trading days. You look at 10-year treasury yields. Now 10-year treasury yields, they are edging higher. Why? Because when you have ongoing trade tensions, the foreign buyers of US treasuries, they remain on strike. So to reach a level that would entice them to come in, it's going to take a couple things. You're going to need some resolution, some clarity on the trade war and the trade battle that's going on. And then also you're going to need yields to rise to a level, just like when you are waiting for something to come on sale, a car, a house, they're marking prices down. Well, how they entice them on the treasuries is yields have to rise to give you a better coupon payment. Now we check in on the precious metals markets, and again, gold up 33.1780 last, but well off the highs, which was 33.3420 in that overnight trading session. I saw a lot of fills come through, a lot of people putting in those limit orders, having rest in GTC orders at higher levels on gold and silver and getting those fills up there. So silver futures trading just below the 33 level, up about 65 cents. High was 33.17 and a half, low 32.25. So we're seeing about 80, 90 cent moves in that silver market. Be sure to have the average true range on your chart there so you can look at the position sizing adjustments. You can look at stop placement adjustments and things like that and put those in place here. So up about 2%. But one thing to note here, we look at where gold is at, we look at where silver's at, and of course we look at the gold silver ratio. So we'll get back to that in about a second. So the important thing was that gold broke through that April 11th high, which was 32.63, and really broke above it to the upside here. And it's surpassed that previous high, that previous all-time peak. And again, the three drivers are the safe haven against the possibility of a global recession and the unpredictability on the tariff announcements. So China, their response is that they want to see the U.S. show a little bit more respect, and they really want to look at what's going on with a number of different things. With sanctions, with Taiwan, they want to address those positions. They want to have a constructive discussion about it. So they want to appoint a point person for the talks who has Trump support and can really prepare a deal between Trump and Xi Jinping and when they're going to meet next. So that's when you get those kind of things. When China comes out with constructive things saying that, hey, we want to reach an agreement, we want to do it kind of on our terms, but we also respect what you guys are doing. And that's where you see things like Nvidia start to poke back up a bit, but now we're rolling back over here a touch. So the markets, they're really uncertain about the impact of the tariffs on the economy, on corporate profits, and a lot of people are looking at, a different range of outcomes with this. So you've got different price points here and expectations on corporate earnings, on the stock market, on things like that. So what to watch today? Well, you're going to want to watch those trade war discussions and tensions. We had one client that was shorting the NASDAQ yesterday and asking if it was a good thing. And I said, well, Trump's got a press conference coming up here shortly, so you probably get some volatility there. And what happened? NASDAQ gaps lower when the reopen occurs. So, we're also going to want to watch, and this is going to be less important today, so you might see a bit of a relief rally in a few different markets here, is that you're going to see retail sales come out. You're going to see industrial production. You will also see Federal Reserve Chairman Jerome Powell. He's going to give comments on the economy. So that could be a little bit of a market mover as well. So shifting gears for a second, we're going to have quite a bit of earnings come out. A lot of different companies here, but none of the big names that we typically want to pay attention to. So when I do have Jerome Powell and he is speaking, one thing that I will be monitoring is the CME's Fed Watch tool. Again, May 7th, 21 days away. Still about a 17% chance of a 25 basis point interest rate cut. It's the June meeting that I'm really going to be watching, where it's a 75% chance of a 25 basis point cut. And that's an uptick from yesterday morning. We're also watching, and again, this is something we watch every day, and this has really been the driver of the gold market here, and it's the new driver for the silver market at the moment, and it's the exchange-traded fund flows. So we saw 115,000 ounces going to the gold market here yesterday, fifth straight day of growth there, and then the ETFs added about 1 million ounces of silver to the holdings in the previous trading session, third straight day of growth here. So your year-to-date percentage change, gold up 7.6%, just edging higher. Silver 1.5%, just edging higher. And the gold-silver ratio, I said I was going to get into this, 101.21. So why is it 101 to 1? Well, when you see analysts cut China's 2025 GDP growth forecast to 4% from 4.5%, it becomes an industrial demand issue for not only copper, but the silver market, but other outside markets as well. So that's why we're not just seeing, we do have it up 2%, but we're not up $1, $1.50, etc. And it's because you look at the copper market, which copper is down about 3 cents right now, traded at $4.59. So it's down just under about 1%. You got the aluminum market down about 1.3% as well. So remember, central banks, they boost their buying activity in the gold market. How much central bank buying is taking place in the silver market? Zero. So as long as we're in a complex trade war, you got to think of this gold silver ratio. Don't get triggered by it, all right? Because I know a lot of people, they call in, a lot of clients, and are like, the damn ratio, it keeps going up. This is unbelievable. Think of the ratio right now as a recession indicator rather than a valuation indicator. So that's where I think that people understand that the demand for silver, 54% of it from the industrial application is there. Yes, investor demand from ETF flows, physical holding, maybe not so much on the physical side because the cure for high prices is high prices. So you'll start to see the physical buying down, but you'll see more leverage products come into place where people will start to buy more of those things, where they don't have that capital outlay. And that's really the benefit of the futures markets here. So checking in, one other thing I'm going to really monitor here today, because a lot of times you have outside markets that make the moves faster than things like the equity markets, like the gold market, like the silver market. So you really want to see oil prices, soybean prices, things that are very China dependent. If they start to make that move first, it could be some constructive dialogue taking place. So remember, it's not just one thing. It's not just staring at the chart of GDX, staring at the chart of the gold market or the silver market. It's taking all of it, looking at the painting all as once and how things are playing out here. And oftentimes you can exploit small areas where there could be an opportunity that lies in a particular market. So again, I'll be watching the copper market. If there's more of a breakdown in the copper market, and silver futures really start to stall out, that's where you could get that little bit of a sell-off go on in the silver market. So silver's got to decide which date is it taken to the prom tonight? Is it the gold market or is it the copper market? So I'll leave it at that. Guys, got any questions? Be sure to get the chart pack. Be sure to also register for the Metals Edge. You guys got any questions, want to open up an account, shoot an email to info@BlueLineFutures or call the desk here. A lot of the guys are waiting here for the opportunity to work with you. So again, remember, futures and option trading, it does involve risk of loss and it may not be suitable to all investors. Good luck, good trading.